This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, February 2nd, 2016. Euro dollar. So the euro continues to be comfortable trading within a well-defined range over the past several days that has been defined on top at 110.60 and below at 107.11. At this point, though, given the broader downtrend, a lower top is favored at 110.60, which will be strengthened on a breakback below the recent low at 107.11, exposing the December 2015 base at 105.21 further down. Sterling dollar. So cable is doing a good job of slowly correcting out from recent multi-year lows at 140.80 from the other week, and there's room for additional upside in this market towards the 146 to 148 area before this downtrend considers the possibility of a resumption. At this point, only back below 140.80 would compromise the corrective outlook and open the door for fresh downside. Dollar yen. So we've seen a nice recovery in dollar yen out from those recent multi-day lows at 115.97, with the market trading all the way up just shy of 122. But there's a lot of formidable resistance into the 122 area, which includes that key March internal resistance at 122.03 going back several months. Also, the market sees a 78.6 Fib retracement off of a recent high-low move, the figure at 122, and also some resistance in the form of the daily Ichimoku cloud top, all coming in at 122. So there is significant resistance in the 122 area, which could stall additional gains, while only back above at this point the 122 level on a close basis would suggest that the market is poised for additional recovery. Inability to establish above 122 will keep the pressure on the downside and suggest a resumption of declines back down towards those recent lows at 115.97. Euro Swiss. So Euro Swiss has broken out in recent trade after several months of consolidation, and the break above 110.50 opens the door for the next major upside extension towards the 114 area further up. At this point, any setback should now be very well supported into the 109 area, while ultimately only back below 107.15, the range lows, would compromise the highly constructive outlook now for Euro Swiss. Aussie dollar. So Aussie has been in the process of correcting out from those recent multi-year lows set the other week at 68.27, though the rally is classified as corrective and the market should be looking soon to put in a lower top ahead of a bearish resumption. Look for a 61.8% Fib retracement at 71.70 to ultimately do a good job of capping gains on a close basis in favor of that next lower top. Dollar CAD. So dollar CAD has pulled back in recent trade from those recent 13-year highs or near 13-year highs at 146.90 to trade all the way back down below 140. But a key support zone now takes hold at 138 to 140, and the market should be looking for a resumption of the more intense uptrend in favor of a higher low now and ahead of that renewed upside extension back above 46.90 and towards 150 further up. Really only back below 138 would compromise the integrity of the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has seen a bit of a bounce out from recent lows at 63.47, though the market is seen consolidating in a bearish consolidation ahead of what should be the next downside extension below 63.47, back to retest the multi-year low from late in 2015 on August 24, 2015 at 61.30. At this point, any rally should be very well capped into 67, while only back above 69 would compromise the bearish outlook for Kiwi. SPX 500. So although we've seen a nice little bounce in the S&P 500 over the past several sessions with the market rallying from those multi-month lows at 1811, the rally is classified as corrective and should soon find resistance and a lower top ahead of some previous support now return resistance at 1993. We've seen a major structural shift in this market following that break below that August flash crash low in the 1834 area, and so this does put the pressure on the downside, suggesting a lower top and fresh downside extension below 1811. Really only back above 1993 on a close basis would compromise this newly adopted bearish outlook for the S&P 500. Gold. So gold continues to extend its rally, with the market now confirming a meaningful base in place by that multi-year low from late 2015 at 1046. The break above 1112 now opens the door for the next upside extension, which could take us back towards the October peak at 1192 further up. At this point, look for any setbacks to be very well supported into the 1090 area, while ultimately only back below 1070 would compromise the newly adopted bullish outlook for gold.